Apple is an American multinational technology company that specializes in consumer electronics, computer software, and online services. It's also the world's largest technology company by revenue, and since January 2021, the world's most valuable company. So today we're gonna discuss over the most important aspects of investing in Apple and also disadvantages that you may consider as well. Apple was founded by Steve Jobs, Steve Wozniak, and Ronald Wayne in 1976 to develop and sell Wozniak's Apple's first personal computer. It was Steve Jobs that truly has made Apple a great giant of today's Wall Street markets, and thanks to his input, Apple has oversaw a winning streak of innovations that included the iMac, iPod, iTunes, iPhone, and so on. But the biggest driver of Apple's modern success is definitely the iPhone. The game-changing smartphone, which debuted in 2007, sparked years of massive growth and created a loyal base of customers willing to buy Apple products and services. Okay, so firstly, let's look at the fundamentals behind Apple and also strengths that may impact the future growth of a company. So the first one is definitely the dynamic of earnings. Let's look at third quarter of earnings that CFO reported that products revenue was a June quarter record of $63.9 billion, up 37% year over year. Services set an all-time revenue record of $17.5 billion, up 33% from quarter 3 2020, and the gross margin, that is also an important factor, was 43.3%, up 80 basis points from quarter 2 2021. Don't forget that Apple is a large and efficient operation. So Apple has 147,000 full-time employees, and net 2020 sales were $274.5 billion, or over $1.8 million per employee. Also, something that adds to this sustainability of growth is a new program that is called iPhone Upgrade Program that moves the company toward a continuous subscription model, so users get a new iPhone every year. As of next, let's look at earnings call again. Tim Cook noted that the iPhone showed a strong double-digit growth in each geographic segment. This is also strengthening the power of a company. There are also some products and services that are engaging users even more than it was before. Just look at Apple Car, iCloud, App Store, Apple Music, Apple News Plus, Apple TV Plus, and so on. Lots of new apps are ongoing to the shop, and also really enriched with some new features. Let's look at the next one. Needless to say, Apple is continuing to expand its products and services through successes like 35 Emmy nominations for Apple TV Plus and also newly introduced Apple Podcasts subscriptions. And furthermore, Apple's ecosystem facilitates cross-marketing products and services, and Apple's customer base includes over 1 billion active iPhone users who provide a market for what's next, from an Apple AirTag to a potential Apple vehicle. And Apple is becoming more interconnected through wireless devices. We can find that within this global village that the world is becoming, the demand for communications technology will definitely continue to grow. So these are some aspects that are impacting a possible growth of Apple, and also can determine and propel the future growth of a stock. Okay, so right now let's look at the downside, because there are some also concerns regarding future performance of Apple. Just bear in mind that Apple, as every single other company, is not immune to economic downturns. Many of its products are just aspirational and require customers with considerable discretionary income. The perception of Apple as a closed ecosystem also preventing some potential customers from choosing Apple's products. And as competitors' technology improves, it becomes increasingly difficult to differentiate Apple's largest business, the iPhone, making it vulnerable to commoditization. Apple is also criticized for its large cash position. So CFO said that Apple ended the June quarter with $194 billion in cash plus marketable securities. Total debt was $122 billion for a net cash position of $72 billion. So Apple is sometimes criticized for not using this cash for some acquisitions and also for development. So just look at right now at the problems with supply chain disruptions as we are suffering to this right now. Tim Cook, CEO of Apple, is also very concerned about the situation. Now, we also know that Apple is a company with hardware products mainly manufactured by outsourcing partners located primarily in Asia. So many components used by the company are at times subject to industry-wide shortage and significant commodity pricing fluctuations, as Tim Cook said. So Apple has right now 15% of global smartphone sales. Samsung obviously leads with this ranking, but Apple's appeal in both affluent and aspirational markets that make it a target for competitors. As of right now, we can find that China presents several points and there are maybe a threat to Apple. The first one is government can make it harder to sell Apple products in China. The second one, Apple would be hurt by the loss of components manufactured in China. Also, Chinese companies such as Xiaomi, Oppo, Vivo, and others are the fastest growing competitors in the global smartphone market. Right now, let's look at valuation a bit more because it seems to be quite high as of recent, especially after this July's growth. So over the past decade, a 26x forward earnings multiple, where we are right now, could have been considered for a company like Apple as this one with a great potential for increase in revenue streams. However, the company is right now expected to grow earnings per share at a much lower rate than before, and even with this high end and of those projections calls for a mid to low single-digit growth rate. So for the next 5 years, the company is expected to report an EPS CAGR of just 4.6%. So it's well below their previous growth rate. This projects an average forward price to earnings multiple of over 25x, which is quite high for any company, big or small, which is expected to grow earnings at that level. So in order to sum up those concerning factors, these are not that revolve around just the revenue, but also about eroding global smartphone market share to its three Chinese competitors. Right now, the potential in a medium term of Apple is still unthreatened. However, this dynamic of a growth may be a little bit slow down. In terms of trying to predict what will be short-term Apple's valuation in terms of 2 months, we need to just look back at the previous important events for this company. Let's look at October 13th, where Apple debuted with its iPhone 12 series. So investors back then were unimpressed with this product, and Apple stock fell afterwards after this event about 3%. Let's look at another event where on April 20, Apple introduced its first Apple Silicon-powered iMac desktop computers and new iPad Pro tablets. It also unveiled its long-awaited lost item trackers called AirTags. However, Apple stock sank that time about 1.5%. So does it mean that this time, on this September's very important for Apple event, when we will just have introduced its new model of iPhone 13, we see also a drop in a stock price? It's highly possible, as this phenomenon of selling on the news, selling on the event occurs very repetitively. Also, in terms of trying to predict valuation of a company in September, we may also take a notice on what has happened during July. So June and July gains has front-loaded very good earnings season in the stock. The stock has recently delivered one of the best quarters in the company's history. So with this current dynamic of a price, we may be preceding future event that is even planned as to occur in September. So it means that the only one event that may not be priced in right now in Apple stock is its speculation around that Apple is looking to make a self-driving electric car. Those rumors picked up steam in January and right now is getting more and more attention. So right now Apple car rumors haven't done much to lift Apple stock, but in the future that might be a case. So that's something that we may consider in terms of short-term prediction on a stock, and we also might take a notice that in a medium term the stock valuation may increase, but the dynamic of a growth, as I just previously has debated about, may slow down.